What is going on, everybody? Welcome back to Trading Learning 101. Today's video, we're going to talk all about halts, circuit breaker halts, the different types of halt codes. We're going to break it down piece by piece and explain to you all everything you need to know about trading and stock market halts. Let's jump into it. I got the idea for this video because last week, BDR had a T1 halt, which is news pending. There's different types of halts in the stock market. You got volatility halts, a T1 halt, which is news pending. You got a T12 halt, which is the SEC is requesting more information from the stock, and the stock could be halted for days, weeks, months. BDR got halted right at 10 o'clock as it was approaching $4, and this stock was halted for almost 4 hours, and when they reopened it, they gapped it down to $1.87, and it dipped down to $1.50 and ripped right back up to $3. It's scary stuff, and I tell people and I try to warn people, when you have a stock that's running and getting halted non-stop, especially if the stock has no news, you always have to think in the back of your mind that fear or that chance that the SEC could halt this at any moment and request information from the company. Why is your stock running with no news? And it could kill a lot of people's accounts. I've already made a couple videos on trading halts. One right here, stock trading halts, and another one, market-wide stock trading halt, circuit breaker halts at open. People don't watch these. If I click on this one, only 177 views, and I posted this a year ago. Let's look at this one. Click on this one and load it up. This one only has 176 views, and I posted this 6 months ago. So when it comes to education in the stock market, people don't want to invest into the education. They just want to trade, make money, or if they lose money, they quit. Plain and simple. A very helpful and useful website is the Nasdaq.com. I will leave a link to this in the video description. You guys can check it out. And what this is it gives you all of the halt codes that there are. For instance, a T1 halt, news pending. A T2 halt is halt, news released. And there's all different kinds of halt codes. There's the feared one, the T12 halt. If you get caught in a T12 halt and you're in a position, pretty much kiss it goodbye, because that T12 halt could last for days, weeks, months, even years. It could never reopen again. T12 halt, additional information requested by Nasdaq. Trading is halted pending additional information requested by the Nasdaq. Again, I will leave a link down in the video description. I highly recommend you guys check out this list, learn about all of these codes, and prepare yourself. The more you know, the more edge you have in the markets. That's why I always say at the end of my videos, study, study, study. There's so much to learn in the stock market. So what we're gonna do is we're gonna go over circuit breaker definition from Investopedia, and we're gonna look at this little blog post here from Warrior Trading, Ross Cameron. I've read through it already. It's pretty cool and informational, packed with knowledge. I think you guys will really like it. And I will also leave a link to the other halt videos that I've made in the video description below, so you guys can check it out. So why did BDR get halted on August 19th of 2020? Why? Well, let's bring over the news. Let's see what news came out on that day, August 19th. Bring over the news feed here, August 19th. Even before that, there was really no news. They released a Form 10Q on the 13th, but on August 18th, there's all of these Form 4s right here. Let's click on one of these Form 4s. What a Form 4 is an insider in the company is either acquiring shares or they're disposing of shares. So the day before this stock had a big run up, you had all of these Form 4s released on the 18th. Insiders were either acquiring or disposing. Let's click on one and see what they were doing. So right here, they're acquiring all of these shares. And how do I know that? It's code A for acquiring or code D for disposing. So code A, all right here, they're acquiring. The transaction date that they've been acquiring. So right here on August 14th, they have acquired 562 shares at a price of 77 cents, which is bringing their total to 13,000 shares that they own now. It has their name up here, what their relationship is. It's the senior vice president of the company. And you can go through, and this is what I like about Street Smart Edge. The news feed on Street Smart Edge is so fantastic and powerful. You don't need to go off and buy all those news feeds and news streamers or even those subscription services to like BAM SEC or Flash SEC. It puts all of the SEC filings. Whenever there is a filing released by the company, Street Smart Edge is going to release it. So all you really have to know how to do is know how to read SEC filings and you're all set. So we have all these Form 4s and we're clicking on them. Another person right here on the August 14th, they've acquired 1,249 shares at 77 cents. So we have all of these people putting out Form 4s the day before the stock ran up. Then the next day, on the 20th, or the 19th, I'm sorry, Amex Halt, additional information, last price $2.98. So there was no news that came out the day this stock ran. This is part of the reason why they halted this stock. The company did not put out any news. You had insiders acquiring shares the day before. Why they halted this stock? That's insider trading right there. If you're loading up on a stock the day before and then the next day the stock runs up in price, that's gonna have some people scratching their heads, especially the SEC. They're gonna be scratching their heads. Why were these people all on the inside of this company acquiring shares and then the next day their stock is getting pumped with no news? And then as we zoom out right here, the last day, even if you zoom out days before this big spike right here, there's no volume all right here. So no volume, stock starts to heat up pre-market and boom, shoots up in price. You know what probably happened with this? Some chat room out there pumped this stock. That's exactly what happened. That's why I always try to preach in my chat room. If we have a stock running and it's a low float stock and the company doesn't have any news out and the stock's getting halted, you always have to fear that the SEC could halt this and investigate why is this stock running with no news. And another thing to keep in mind, the volatility halts. Stocks under $2 and under $1, volatility halts, they're gonna get halted so much. The rules, they keep changing the rules of trading halts as time goes on, and it just makes it more complex and more harder, which is all they do. They just literally changed the volatility halt rules like 6-7 months ago, and it's leading to randomness, to be honest now. So let's zoom in on this right here. Stock opens up at $1.50 and it runs up to $2.80 and they halt it. They reopen it back up, they gap it down, and it runs down to $2.50, and then they run it all the way up to $3.80 and it gets halted again. And then this time it's halted for 3 to 4 hours before it reopens. This is why I don't trade stocks under $2. If a stock is $1 and the stock jumps 10 cents, that's a 10% move. And if it makes that big of a move under 5 minutes, they're gonna pause trading. So let's look up, what are circuit breaker halts? A circuit breaker is a kind of regulatory measure that is used to temporarily halt all trading on an exchange. Circuit breakers are in place to curb panic selling. They are used both in broad market indexes such as the S&P 500 as well as individual securities. They exist in the United States as well in other countries around the world. Circuit breakers function automatically by stopping trading when prices hit predefined levels. For an example, if the S&P 500, a circuit breaker may be triggered after a 7%, 13%, and 20% intraday moves. Now, they just changed the rules, like I said. A year ago, it used to be 10% was the first level for volatility trading pauses. Now they've lowered it to 7%. So if you're trading a stock that's $1 and that stock shoots up 7%, which is 7 cents, they're going to be halts all day throughout the stock. Let's take a look at an example real quick. This is ticker symbol GVO. This recently had a run up from $1 up to $2. The stock had 1 billion in volume on the day. But what I want to focus on is the halts on this. You can see right here, this stock ran up from $1.61, runs all the way up to $1.90 and gets halted. They reopen it and the stock slams down from $1.90 down to $1.70, 20 cents, and it gets halted again. They reopen it, stock rips up to $1.90 again, gets halted again. So the stock's moving 20 cents and running into halts. And it just, look at how random it is. Back a year ago, it wasn't as random as this. If a stock was running up with momentum and it got halted, they would pause trading for 5 minutes. The stock, majority of the time, would gap up and keep going. Now, with the new rules in place, it's complete 100% random. You don't know if the stock's going to gap up and keep going. You don't know if the stock's going to gap down and keep falling. And look at what's going on with this. Stock tops out here just above 2, slams down to $1.95. So from $2.15 to $1.95, 20 cents, runs into a trading halt. Stock opens back up, slams down from $1.90 to $1.70, runs into another halt. And this is the randomness I'm talking about right here. It slams down like that and gets halted, and when they reopen it, it rips right back up, and then it trends down, gets halted, and opens back up and down, pops up, slams down. You're going to run into so many volatility halts with stocks. The lower the price is, the stock doesn't have to move much with volatility to get halted. That's what I'm trying to get my point across. The higher the price is for a stock, the more movement is allowed for halts. So if you're trading a stock at $20, it has to move 7% to trigger a volatility trading pause. So let's take a look now at Warrior Trading's blog post, Circuit Breaker Halts, Everything You Need to Know. As a full-time day trader, it's inevitable that you will get caught in circuit breaker halts from time to time. That means it's important to understand why halts happen, what causes them, and how to deal with them. Any stock in the market can get halted at any time. The two most common reasons a stock will be halted is pending news or for a volatility pause. When a stock is halted, it cannot be traded by anyone. The risk with halt is that when the stock reopens, it can reopen at any price. There really isn't much you can do if you get stuck in a halt except wait until trading resumes. A halt pending news can last hours or even longer, while volatility pauses are usually 5 minutes, but can be as long as 10 minutes. I've seen volatility halts range from 5 minutes, 10 minutes, 15 minutes, even 20 minutes. I've seen trading halts last as long as 30 to 40 minutes. I want to show you guys another example really quick. This is KELYB. Look at this. All of these halts going all the way up from $30 all the way up to $90 and then falling all the way back down. Look at how wild this is. Halted at 30, reopens at 36, runs into a halt again. Gaps up to 40, runs up to a halt to 46, and this just keeps running into halts all the way up. But then look what happens. The stock gets halted here at $70, gaps up to $76, or actually I'm sorry, gaps up to 90 and then slams down to 74 and gets halted. Reopens, gets a quick spike, slams down. This is the scary part right here. The stock got halted at $76. This reopened at $60 and slammed right back down into a halt at $50. From $76 slams down to $50. If you're holding on to 1,000 shares, for an example, that's a $25,000 loss. This is the dangers of trading and being in halts, or trying to trade stocks that are getting halted like this. You have to consider the risk and stay away from stocks like this. This is nasty. This is pure 100% risk. And that's what people forget about. The only thing people see is, wow, this stock ran from $30 to $90. That's all they see right here. They do not consider the fall back down to reality. Look at that. That's just wild. And all within 3 hours of trading, this ran $60 up and $60 down. Circuit breaker halt types. Code LUDP. Volatility trading pause. Stock can also spike up or down and get halted on a volatility halt or circuit breaker. Code T1. News pending. The company has requested trading of the stock be halted while they release material news. This can be good or bad. When the stock reopens, the market will react to the news. Sometimes stocks that are moving quickly on rumors will get halted while the company comes out and responds to the rumor. That's why holding stocks that are moving on rumors can expose you to halt risk. Code H10. SEC has suspended trading in the stock, common among penny stocks and companies suspected of stock promotion or fraud. This is a 5-minute halt to pause trading for stocks priced above $3 and that move more than 10% in a 5-minute period. They keep changing the rules, like I said, with volatility trading halts. It used to be 12%, 10%, and now we're seeing 7%. They're always tweaking and adjusting with the volatility halts. Why? Because they're saying it's supposed to protect the investor. Because when something happens so fast and violently and volatile like that, it's pure emotions that kick in. And that could lead to panic selling, and it could also lead to greed. People are getting FOMO, fear of missing out. They want to buy in. The stock market is a very emotional game. So these rules are in place, and they keep tweaking with these rules to protect the long-term investor. When it comes to day traders, they could care less. Circuit breaker rules are also looser between 9:30 and 9:45 because that is when peak volatility exists. When a stock is halted, you cannot trade it. You have to wait. What you could do, and I do not recommend this, if you are in a stock and the stock is currently halted and you want to get out of that position, you could have an order sitting out there to sell, and when the stock reopens, it'll sell it for you. But the risk with that, you don't know when you're going to get out. The stock could gap down and it sell it for you, or the stock could gap up and it could sell it for you. Or the stock could open up and there's just so many orders going in, it won't do anything and you'll be stuck in the position. Circuit breaker halt volatility pause, code LUDP. A halt on a volatility pause is one of the most common types of circuit breaker halts in the market. If a stock moves up or down too quickly within a 5-minute period, it can cause an automatic circuit breaker halt that will pause trading for 5 minutes. This helps smooth volatility in the market and prevent flash crashes. It forces traders to take a 5-minute timeout, research the stock, news, etc. Oftentimes, if a stock is spiking up and is halted, it will reopen higher. Inversely, a stock selling off will often open lower. This is an old blog post from probably a couple years ago. There is no date on this, but like I've said, they've changed the rules. A stock could be running up and getting halted with positive momentum, but now, currently, August 20th, 23rd of 2020, it's really random now with trading halts. If a stock gets halted on an up move, you don't know if the stock's gonna gap down and reopen or gap up and keep going. That's the rules nowadays. You gotta just adapt to it and revolve your strategies around when the market changes. The markets are constantly always changing. You have to adapt and move on. I have seen examples where a stock spikes up 10% in 2 minutes and get halted for 5 minutes, reopens and immediately spikes another 10% and get halted a second time for 5 minutes, reopens, spikes another 10% and gets halted for 5 minutes a third time, reopens, sells off 10% and gets halted going back down. This type of extreme volatility is typically the result of breaking news such as FDA announcements, earnings leak, buyout offers, activist investor stakes, Bill Ackman, Carl Icahn, research reports, Citron Research, Muddy Waters Research, etc. At its core, this type of volatility that calls circuit breakers is what all day traders are looking for because it presents a huge amount of potential. The question is whether you have the skill and expertise to profit from these opportunities. I've seen a lot of new people come into my chat room. We're day traders. Stocks get halted with volatility all the time. And I have a lot of new people wondering why these stocks are getting halted. It's perfectly normal as a day trader and in the stock market for stocks to experience volatility halts. And it's like I've said and mentioned in this video several times over. The SEC is always tweaking with the rules and they're always changing the rules. So it's always good from time to time to go to the NASDAQ.com and read up on the halt rules. Because something could happen in the stock market, a loophole for an example, and the SEC's on top of it and then they come out with more rules. That's just how they do it. So he has it broken down. Tier 1 and Tier 2, reference price above $3. Market hours, excluding open close, from 9:45 a.m. to 3:35 p.m. A Tier 1 price band percentage is 5% and a Tier 2 is 10%. Tier 1 and Tier 2 security reference price less than 75 cents with the market hours of 9:45 a.m. to 3:35 p.m. The lesser of 15% or 75%. Now you kind of see now, the lower the stock price is, if a stock's under $1, it doesn't take much for a volatility pause to come into place. A stock could 40 cents and it spikes up 5 cents. They'll throw a volatility trading pause because the stock, it's priced so low, in reality, it just made a big percentage jump. At 50 cents, a stock spikes 5%. What is that? Like a 10% move? I'm not great with math. You all do the math. It's a big percentage jump. But let's continue on. Tier 1 stocks. All securities in the S&P 500 or the Russell 1000 indexes. In addition, Tier 1 includes all exchange-traded products that average at least 2 million a day, and daily trading bands are a 5 to 10% for stocks above $3. Tier 2 stocks, all other national market securities include rights and warrants and smaller ETP products. Bands are 10 to 20% for stocks above $3. And then the reference NASDAQ trader of the circuit breaker codes with the definitions all right here. Again, I will leave links to everything that I've covered in this video, and I will leave a link to the list of all of the Halt codes. And then recently in the stock market, we've just witnessed a market-wide circuit breaker halt. Back in early 2020, the market was just falling and falling hard. And this is that video that I made right here. The S&P 500 got a volatility pause. It happened for the first time ever in stock market history. So I had to make a video to show it, mark history. This was a wild, wild day in the stock market. You could see right here at the top of where I have the VIX, the QQQ, and the SPX. The SPX was down 7%. And look at that slam down right there. From 30 down to 27 with mRNA. They did a market-wide circuit breaker halt. They traded pause in the whole stock market. That was the first time they did that. So most definitely a very historical moment. I will leave a link to this video in the description down below. And then right back to BDR real quick. It just shows you guys stock halts happen all the time in the stock market. If you see a stock's getting halted, always protect yourself. Look to see if the stock has news. If it has news and the stock keeps getting halted, people, their emotions are going off. They're trading the news. They want all in on it. If the stock doesn't have news, it's more than likely a pump and dump. Some chat room out there is promoting the stock. If it's getting halted and running into these volatility trading pauses, the SEC and the NASDAQ can halt trading and investigate the company. And if they ever do that, and if you ever get stuck in a T12 halt, you might as well kiss it goodbye, whatever you have in on that stock. Because more than likely, when that stock reopens, it's going to open 50% lower than where it got halted. And look what happened with BDR. It was up at $3.60, and they reopened it at around $1.50, and this thing just straight slammed down to $1.20, and then is fading off down back below $1. If people are still holding this, which they probably are, they're now long-term investors, is like what we like to say. They're bag holders. You got to think of all this volume right here and people thinking that this is a good buy for a bounce when it's not. You have to think of everybody who all bought in all right up in here, and now they're holding on to it. They're bag holders. They're stuck in the stock. above $1.50, waiting for this stock to come back up, if it ever does, to wash their hands with it, sell for a profit. Now this, in the future going forward, you have to remember stocks like this. If this stock ever again, months from now, 6 months from now, a year from now, gets a gap up pre-market to $2, let's say, and you're looking to buy this, you have to remember and look back. And this is where it pays to be here every day. You physically remember these stocks, and you remember how they traded, what happened. And when you look on that daily chart, you're like, oh yeah, I remember that day right there. And when the stock opens and you're trying to chase that breakout, all you're running into is all the bag holders that bought in on this, all up in here. They're all trying to sell a year later, trying to make their profit, wash their hands with this stock. And that's a very good lesson to learn right from this from you guys. What's probably going to happen with BDR here, Blunder Tongue Labs, which is a bogus name, probably going to fade off back down below $1, and it's going to continue just going back down to where it came from. Nothing is going on with this company. Nothing probably ever will. This is just a garbage company right here. That's all it is. Look at the daily. Nothing really looks tempting about this chart at all right here. They've probably done so many reverse splits. They take profit. Look at all these wicks right here on the daily. All these wicks. That's telling me that this stock has a history of not holding its gains. So if the stock spikes, which it did recently right here, look at history repeats itself with all of the top upper wicks. The stock has a history of spiking, but it also has a history of not holding its gains. So as a day trader, that tells me with these long upper wicks that the stock loves to spike, but then it loves to give it all back. That's going to wrap it up for this one, guys. If you're new to the channel, please hit that subscribe button. Join the Trading Learning 101 community where we all grow as traders and investors. If you liked this video, hit that like button. Help me out in the YouTube algorithm. And until next time, have that patience, have that discipline, and study, study, study. Later, everybody.
The most valuable commodity I know of is information. Wouldn't you agree?